Good evening. This side Rahul Magan here is a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multinational hedge fund who have interest in United States market, European market, Asian market, and apart from that, we do have interest in currencies and commodities. But like I repeated many times, that our fund is proprietary in nature. So by proprietary, I mean that no third party can invest capital in our fund. This means proprietary. And today when we launched our dedicated US desk, whereby we would be covering the Dow Jones, Nasdaq, Standard & Poor, probably Russell also very soon, we once again would be proprietary, which means no third party can invest capital. From 2018 till now and till I am alive, I am continuously raising a very important point that the valuations provided by these startup companies are completely fake. But that is a separate thing that the corrupt and compromised media of India, along with the almost failed regulatory mechanism, never accepted that. And this is one of the reasons why a loss-making company who never reported profit, having a negative retained earning of not less than 12,500 crores, which to me is second highest after Ola. I can say because Ola is having approximately 17,000 crores, 17,500 crores approximately. We really need to understand that what had happened in PayTM. Of course, it is subject to investigation. I have already taken the printout and I need some time to, I would say, to read that information, to collate more information, because you understand that I am a person of research. But whatever information which is coming in public domain, as far as the PayTM is concerned, this is raising severe questions, not only on the PayTM valuation, but also on the regulator who approved the PayTM. And I never speak until I have the evidence. So, like I said, I took the printout. It's a 6-pager printout. You can see that. I took the printout of what had happened with PayTM today, and I studied word by word. So guys, and financial. So let's start from the beginning, which is the PayTM mall, is having the following investors. Number one is the Valuation Capital, who holds 17.54% of the stake. Then is the Ant Financial, who holds approximately 15% of stake. Then we have Alibaba, who holds 28.35% of stake. Then we have eBay, who hold around 6.02%. Then we have SoftBank, who reported 27 billion. I repeat, 27 billion of losses in the Vision Fund. 27 billion of losses in the Vision Fund. SoftBank holds near to 20% stake in PayTM Mall. Then we have other ESOP Trust and Vijay Shekhar Sharma, Einstein, who hold 9.08% of interest. So let me study this. At present, Ant controlled 14.98%, which is near about 15%, stake in PayTM Mall. while Alibaba holds 28.43%. As per FinTracker estimates, Alibaba and Alibaba holdings in the PayTM mall were valued at 483 million. You heard me right? 483 million and 684 million respectively. So, Ant financial valuation, whatever money they invested, was 483 million, while Alibaba valuation was 684 billion. And this came at a time when PayTM Mall was valued at 3 billion. You heard me very right, at 3 billion. So what I did, I invited my friend, my best friend, which is, so let's do some mathematics. 483 plus 684 divided by 3000. Around 39%. 39% of the total valuation at a given point of time of the PayTM mall was owned by Ant and Alibaba. 39%. Right? And this is around 1.167 billion. 1.167 billion. Okay. You would be surprised to know that, let me study for you. Alibaba, whose valuation was 684 billion, they sold their stake in just 3.5 million. 684 million stake is sold merely 3.5 million. Ant Financial, whose stake was 483 million, they sold merely 1.8 million. So let's do the mathematics again. In case of Alibaba, the loss is around 99.5%. You can say 99.5%. So 99.5% of the valuation is shaved. 99.5%. If I speak about Ant, it's around 99.63%. This is Ant. 99.63%. Which means both Alibaba lost 99.5% while Ant lost 99.63%. This raises big questions to me, in the sense like we are talking about fake valuations. How come Ant and Alibaba posted huge impairments standing not less than 99.5%? And you would be surprised to know, if I go with the other documents, which is also uploaded from the internet, the price at which Jack Ma sold the stake brings PayTM Mall valuation to 100 crores, down from 3 billion, which is near about 21,000 crores in 2020. Which means 100 divided by 21,000 crores. It is 99.5%. I can't digest this fact that only because of exit by two investors, which is Alibaba and Ant Financial, PayTM Mall valuation decreased to 99.5%. It means it's a throwaway company. It is almost a throwaway company. You can say that. I have one more statistics. In the financial year 2021, PayTM Mall reported 504 crores of losses. So 504 crores of losses booked in financial year 21. And in financial year 20, it is 480 crores, which means just 20 crores less than 1,000 crores. Only in 2 years, financial year 20 and financial year 21, PayTM Mall reported 1,000 crores of losses. Evidence? Evidence. And still their IPO got approved at 2150. Investors invested heavily in the IPO. And now when this news is in the public, of course I download it from the public. When this news is in the public, probably very soon the investors would quit whatever rate they are getting. This would further deteriorate the PayTM valuation. But once again, it raises a big question. How come a loss-making company IPO is approved, knowing every information? This is Rahul Magan from Treasury Consulting Group. You knew my personal number, 9899242978. Let me repeat, 9899242978.